You can fast forward to the beginning of this. I'm just going to let a few people come into the live. This is an impromptu live, so I'm not going to wait for the big crowds. You don't have to share. Everybody can watch on the back end if they want. Just testing the audio and video. Yeah, we got that. Okay, so we're going to kick right into things. First of all, the following solicitation by otherwise transacting stock derivatives shows to be construed as endorsement of any particular investment opinions. Just read the rest of this. I'm not going to go through the full shtick today. Just suffice to say, I'm not a registered financial advisor, and this content is for informational, educational, entertainment purposes only. I reserve the rights to change my mind without updating this content and to trade as I wish on any security, regardless of the perceived implications of this content. All right, so that's cool. So I'm not going to go through the weekly shtick of who I am and all that stuff. Go to Friday if you're new to me and you want to check that out. I've got all my credentials and everything, so you know exactly what I'm all about and why I consider myself amongst the very few professional investors out there providing research on the internet for folks like yourself. Very quickly, lots of people asking me about the tariffs this morning. Listen, we've dealt with this before, right? Trump was a president several years ago and went through this. Yes, it rattles the markets, but as I've been saying over and over and over, these are negotiating tactics. And part of negotiating tactics is actually showing that you're willing to go through with things. And so he went through, right? But what do we see just 19 minutes ago? White House confirms 1 month delay on Mexico tariffs. All right, so anybody who freaked out this morning, sold out, what have you, so this is what happened. You sold out here and you just missed a whole 1.4%. That's major on an entire portfolio in a morning. Okay. So, it just goes to show you reacting to things like this, without fully grasping the situation is not wise. A few stocks, I don't understand. You've got, it's only 3% down now, so not so bad. And I don't have the US version, but GeoDrill, they get paid in US dollars. The US dollar has been strengthening. They don't have anything that they export from their countries. They're a service provider. Makes no sense, right? Yes, the market going down is going to drive other stocks down, but, Electric Core, I already checked. They make their stuff in the United States. Down 4%. Was down 18% in pre-market. Why, people? The only thing I saw was an S3A filed with the SEC, which is meaningless. The S3 was what people needed to be concerned about and get analysis on, which I did and provided to you. So that was a nothing burger. S3A, obviously a nothing burger, since the S3 was a nothing burger, right? And I contacted Dan Goldberger, no pun intended here, not trying to battle rap. And, he actually said he doesn't see any reason why the stock was acting like that this morning. I was a buyer immediately on that since there was no news. And boom, now we're only down 4%, which is okay, fine. On a day like this, I suppose I could see it makes no sense because they just got added to Amazon. Okay. And their product is, again, made in the U.S. So you got to go through these companies one by one and see what the deal is. You got Kraken up 1.6%. So obviously people have figured out that there's no problem there. But look at the freak out in the morning. Are you kidding me? 13% down to open this morning? Yeah, I understand. This is not an American company. So the tariffs. You have to put things into context. How much of their product is made outside of the U.S.? What is their exposure to that? And more importantly, maybe most importantly, will the U.S. provide an exemption for certain products such as perhaps batteries that go into autonomous submarines for military use, you think we're going to screw ourselves over? The United States of America is going to do that? Do you think Trump is out to screw the United States? No, he's out to screw everybody else at our benefit, right? Is what it seems. I'm not being political, but that's right. That's the implication here. So, right, people panic out of Kraken first thing in the morning, and you lose out because those who took advantage of whoever bottom ticked this stock has made 17%. Congratulations. Okay, so bottom line, I'm not freaking out at all over these tariffs. Do they create volatility? Yes. Should it tank the market if he goes through with these things? I'm not so sure, right? Because it's going to benefit some and it's going to hurt others. It's certainly going to benefit domestic corporations in getting more U.S. market share, right? If you were experiencing competition at the hands of a foreign country, right? You own a company and your biggest competitor is a foreign, and we just put a 100% tariff, 300% tariff on foreign goods from that country. Your competitive positioning in the United States, the biggest customer of products on the planet, just went up, which means your prospects just went up. So there's nothing wrong with that. Okay? So you got to be, like, I don't watch CNBC for a reason, because I want to formulate things on my own. Sometimes I'll check out CNBC to see what people are talking about, but not to take their opinions, because these are obvious. I hate to say it, to me, idiots. Okay? Idiots. And that's a nasty thing for me to say on a day where I'm going to provide an apology for some things that were said on Friday, or at least how they were construed. I went back and watched the video and I was like, okay, I understand some people are a little upset this time around. It's funny because, I have my shtick, the dummy shtick and all that stuff, and that's all well and good funny, but this is a little bit different, so we're going to handle that. But anyways, I'm not going to spend any more time on this. Suffice it to say, I'm not concerned about any of our names. I research our names. I look at what they do. I look at the potential. Even if you look at a gatekeeper who does produce its products in Canada, they are not far from the United States, and I've spoken to him about this in the past, and it wouldn't be anything for them to move that manufacturing over to the United States, since most of their customers are U.S. customers. So, this is a problem, as I said last week, for companies who rely on their actual place of origin, anchored to their place of origin. Gatekeeper, not anchored to their place of origin. They could move. An oil driller in Canada, problem. A gold miner in Canada could be a problem if the gold is going to be moved to the United States. But guess what? Gold is a global asset, so you don't worry about that. Oil, okay, so you got to look at this on a case-by-case basis, bottom line. And from my portfolio, the names that I give to you, we assess those issues. No need to freak out. Real quick, by the way, the Fear Greed Index moved down to 40 this morning. I saw maybe lower, but it was 40. Now it's shows 44. Let's see, 44. That's the fear territory. Okay, so the market's starting to get it there. The 10-year yield continues to come down, so that's positive as well. So honestly, not much to see here. Par for the course. Trump using his powers of negotiation to figure out how he should be interacting with each of these countries. Okay, it's not going to be willy-nilly, and it's not. We assume that it's not going to be to the detriment of the United States overall, though I would agree with those that say that a tariff war is not good for global commerce, although it could be good for individual countries if they have been on the short end of the stick in terms of global commerce prior. So we'll see how that turns out. I think only God knows the answer to that. I know a lot of economists are providing their opinions. They're not God. Okay, so let's move on to the more important thing. So last Friday, Somebody asked me about LCFY. This has been a lightning rod subject for me because I have great respect for breakout investors who are positive on that stock. So I've tried to stay away from it, but have said that, if asked, I may weigh in on those things. So I did, and in that process, I used the word pumpers in that show, and the show itself was entitled liars. Right, so there was this kind of, some people took it to mean that I was calling breakout investors pumpers. It wasn't many people, but it was enough, right? More important to me, it was the actual people at breakout investors who I hold in high regard. Okay, you hear me shout them out. In fact, I shouted them out earlier in the show. But that doesn't, a right and a wrong don't make a right, or even a neutral at the end of the day. So when I went back and rewatched the video, it was, I could understand why it looked like I might have been implying that they are pumpers. So let's apologize for that in no uncertain terms. I didn't mean for it to sound that way, but I see how it could have, and I need to be careful about that because obviously I'm out here in the public domain talking about different people and things. And so even though it's funny, I do the dummy routine and talk about the idiots on CNBC and all that, there's a line to be drawn as far as that goes. Now, that doesn't mean I'm going to pull my punches when it comes to an analysis or when I think an analysis is incomplete. And that stands. I'm not apologizing for my belief that the analysis done by these guys in this case is incomplete, and in my opinion is wrong, but only God knows. They've done a good job researching it. Good, not great, so we've got ourselves a little debate going on here, right? And which is good. The friendly competition once in a while. I try to stay out of that with people that I consider friends. This is one that seems to keep pulling me back in, so I'm not going to comment on the rest of their picks. In fact, we actually have a lot of picks in common. They've commented on my picks in the past as well when they have a strong opinion, and and that's fine, right? We're not going to get into a battle like this, but this one in particular, Sam, I don't know who's Kendrick Lamar, and I don't know who's J. Cole, not J. Cole, Drake. In this case, maybe there's a J. Cole out of this who comes out of nowhere, but it looks like we got a Kendrick Lamar versus Drake situation. So you came out and in defense of LCFY, hitting on my comments one by one, very diligent. So let's talk about this a little bit. All right. So let's see. First of all, LCFY is just a glorified SEO company, and he doesn't deny this. It's like saying Intermap's a glorified 3D mapping company. It's what the company does. There's a big difference here, Sam. I always, every week, what am I saying? We need to talk to independent industry experts to validate the positioning and products of a company that we are investigating, because management is not to be trusted. Okay? Certainly not easily. There are many management teams that I trust, but they've provided me with years of track record personally, right? Of personal interaction, of being honest for years with me personally, and doing what they say out in the marketplace to say, okay, these guys are trustworthy. That's what it takes. Years of trust building. Okay? These guys have not, in my opinion, done anything to garner trust. They haven't executed on anything. You look at their revenues, they haven't gone anywhere. Small gains in revenue, but here's the problem, right? These gains in revenue, we don't know how much of that is organic because they've been spending money on acquisitions. Okay? So if you look at the cash flow statement, look at all those losses. Okay, nothing but losses out of this company. You've got issuance of common stock every year. Okay, so they're diluting shareholders every year, including a disastrous looking ATM from H.C. Wainwright. I used to have a little side business where I make about 6 figures a year shorting little pump and dumps. Again, when I say pump and dump, I'm not referring to breakout investors. I know them personally and have for years. They've earned my trust, okay, for integrity. I have no question whatsoever of breakout investors' integrity or intent to do good research. I think they do, in all cases, the best job they can, and in many cases, it works out great in their favor, which is why I give them a big up out on this show. Many I do not, right? But a lot of pump and dumps use H.C. Wainwright and ATMs as their source of financing. So that's always a, not yellow, a red flag, bright red flag. You could almost short every single H.C. Wainwright ATM and make money. They don't all go down. There are exceptions to the rule, and you have to find out why. This is more important, okay? Because I'm not saying that all H.C. Wainwright ATMs are pump and dumps. They're not. Many are actually good companies, but many is not most by any stretch of the imagination. And one thing that actually really does delineate in that situation is the company, does it have a history of diluting shareholders aggressively? And this company does. Not only that, what's crazy is for a company with just a few million in revenue, okay, you've got executive officers and directors, Gavin Burnett, 892 in total comp. That's insane. That's absolutely insane. Okay? There's no way that a company this small should be paying its CEO to that level of compensation. I mean, look at what percentage of revenue that is. Okay? And look at what it does to their operating expenses, which results in all this negative operating income, which leads one to wonder. It's not an accusation, to wonder, because another aspect of my short selling side business was looking into management, looking into the company and saying and determining, is it a lifestyle business? What does that mean? It means a company that, one, probably shouldn't be public, but two, most likely is because they are using the public domain, being a stock, to dilute shareholders to pay themselves a very nice salary. Okay? There's a company that had a business, and it might still be out there, that claimed to be creating a partnership with the country of Sierra Leone for diamonds, I think it was. Okay? Back in the day. And as it turns out, it appears that it was really nothing. It was a nothing business. It was some guy living in Boca Raton, right? And going on trips to Sierra Leone every once in a while, but no deal ever went anywhere. Yet every year they seemed to come out with some crazy press release that would pump the stock out, into which they would dump shares to bring in cash to continue paying the CEO his exorbitant salary. That's all it was. It was just a front for the CEO to get paid a nice salary every year for doing nothing. Okay? That exists out there. I know this factually because I found a lot of companies of that sort and made money shorting them. This company looks like that. I'm not saying they are, because this is a company that is doing real things. But it feels like a hybrid of the two. It feels like a company that is over-exaggerating its capabilities, okay? And in fact, this doesn't make it true, right? But this, when you're doing research, you can ask AI certain things, and it helps to give you leads as to, what's going on. And when I talk about independent industry experts to validate a position and product of a company, the importance of that is so you understand the difference between what management is telling you and what reality is. And the reality in this case is that LCFY is not as unique as they portend to be. Okay? You see it here. There are many companies that have their capabilities. All right? From a localization standpoint, this company has been public for a while now and in existence for even longer than that. We've got a public track record of revenue going back to 2020, and yet they haven't gone anywhere with this. Why? Because it's not a major differentiator in the marketplace. They're not alone in this. It's not new, and it's not groundbreaking. Okay? Not that we've seen as of yet. And remember, if you haven't proven, right, this is one thing that I saw Sam say, is that the groundbreaking deals with Hearst and the new one that they just came out with make them a gold mine stock. No, that's not how it works, Sam. You clearly, no offense, but you haven't paid attention to what a gold mine stock is. You have to prove something, because you mentioned Intermap. That's great, because what's interesting about Intermap is that Fathom's the other company that they formed a relationship with. Intermap had a deal about 10 years ago with the country of Congo, long before the Indonesian deal. Okay? Now, if you bought Intermap on that news, right here, somewhere in this ballpark, right? You got smoked. And I don't know exactly where it was, but you got smoked, because, trust me, the deal took place long before 2019, right? And we got 14 cents there, and back here was $4. All right? So I can't pinpoint right now exactly where that happened, but it happened somewhere in this ballpark, several dollars down to a few cents. Why is the stock up now? And actually, why did that happen? Because the Congo deal proved to be nothing. Smoke and mirrors. Very little of anything. And this is the problem that we see here. We don't know if the deals with Hearst and Fathom are going to provide any long-lasting, significant economic benefits for the company, or if it's just the latest in a long line of SEO projects, which SEO companies do for companies like Hearst and Fathom. And this could just be another, way that they make their year. I don't see this as a scalable business as of yet. I don't see signs of it. They're putting technology in place. Okay, they're putting technology in place. The problem is that if you look through the 20F, their annual report, you don't see signs of R&D, except if you look at the capitalized lines. And when I go through all that, I find that, number one, they're capitalizing software. They should be expensing it, which makes their income statement look better. They're actually getting more losses than they report because the capitalization of software. And yeah, I get it. They haven't commercialized. People expense their software. Okay? That's generally what happens. It's not preferred to see capitalization. Not a big deal, because it shows up on the cash flow statement, which is also negative for these guys. But when you look at the capitalization of their technology, it looks like they're only spending a few $100,000 a year on R&D. That, to me, and I've spoken to many industry experts. Sam challenged me to produce them for him so that he can question them. I can't do that. I protect my sources. What I would say, Sam, is where are your independent industry experts to help validate what's going on here? Okay? Because that's important. Mine, universally, like 100% of them looked at this and said, Mark, is there any reason why you think this is anything more than just some glorified SEO company? It's just another SEO company using software for automation. Localization is not something special. What am I missing here? And I was like, no, I didn't want to tell you that I'm bearish in the first place, but I'm bearish. I needed your independent opinion without my bias entering in first. They're like, well, your bias is justified in my opinion. 100%. Of several long-term industry experts, multi-decade experts, folks with a lot more experience than the special, what was the name of the guy? I forgot his name. Jimmy? Who, Sam, you say, okay, it's okay to be self-taught. Yes, it's okay to be self-taught, but you really think a guy that taught himself SEO 10 years ago is going to run circles around the top guys in this industry? Come on, man. And even if, then because it is possible, right? It is possible, but vet the guy. Check him out in the industry. See if anybody's heard of him. Nothing on my part, okay? In fact, what shreds of evidence I found were suggested that he's puffing himself up to be something that he's not quite. Okay, you taught yourself for 10 years. You're an expert. You surely know more than me about SEO, 100%, right? Because I'm relying on my circle of experts to tell me about all this. But that doesn't make you anything special. You're fine. You're an SEO company. That's fine. Does that justify a multiple of revenue? Excuse me. Without any proof that what you're doing is anything more than just yet another annual project that doesn't lead to significant increases in recurring revenue? Because we haven't seen that in this company. To the contrary, go look at the sources of their revenue in past years. You have things like setting up a website, right? Like these one-time things, they do not have a scaling, renewable business. It looks like a typical SEO company that goes project to project to project, and whose size is going to be based on how many deals they can win and how many employees they have. And the margins on that are typically not low. And surprise, surprise, they're not. They didn't even have positive gross margins. Excuse me. Until this year. That's gross profit. This means that it costs them more to provide their services than what they charge for the services, without taking into account SG&A and depreciation, amortization of their past purchases and capitalization of software, right? And as we can see on the cash flow statement, sale, purchase of intangible assets, okay? So this is the cost. This is the money that they spent over and above the tangible assets that they acquired, desks, computers, things like that. So you see acquisitions every year of technology. This is presumably these companies that they've acquired, a handful of them. So you've made these acquisitions. You've spent this money, cash, off the cash flow statement, leading to the need to issue common stock year after year after year. And yet, you don't show anything measurable on the income statement to show for it. $4 million in 22, $4 million in the year ending June 2022. So from June of 2021 or July 2021 till June 2022, you had $4 million in revenue, and 2 years later, our trailing 12-month revenue is less than $4 million. Even though you've made acquisitions of other companies, which surely had some revenue, I should hope, unless you acquired nothing and paid money for it on the shareholder dime. I'm not making an accusation, but Jimmy could be a friend of Gavin, and Gavin could say, you know what, I'm going to give you $1 million to buy your company. Yeah, but Gavin, my company doesn't do anything. Yeah, that's okay. We'll make you out to be some industry expert, blah, blah, blah. Right? I'm not saying that happened. I don't think that happened. But that can happen. And we want to eliminate losers. We want to eliminate risk. But we're seeing a lot of risk here that raises the possibility that there are some things going on here that aren't so great. Executive compensation. How do you pay the CEO of a company that has shown negative growth over the past 2 years, 2+ years, 2.5 years or so, negative revenue growth and negative gross margins, negative operating expenses, and no proof except for the latest deals What happened to everything in the past? What happened to all the past promises that didn't come to fruition? They haven't delivered on anything yet, and yet there are investors out there saying they're going to deliver on this, that this is going to have a lasting impact. And I talked about on Friday about the Hearst deal, so I won't reiterate that. But to me, it doesn't sound like anything lasting. When you have a company called like Hearst that was hosting content that is not considered to be of high quality enough that Google said, hey, we're not going to just lend your reputation to this content. This is content that requires SEO or something more. And Hearst was offering something more, their reputation. Now they can't offer the reputation. Now it defaults back to SEO, and LCFY is not a special SEO company. They just got that deal. All right. And this content doesn't necessarily produce year after year after year. Yes, we will see if this starts to work. But that is what goldmine is, when you actually see something working. Because this company has proven time and time again that they cannot build a sustainable, recurring revenue stream. And in the world of SEO, that is not a surprise, because SEO companies without anything special, and most of them have nothing special, typically are stagnant, but nice businesses to be private companies, not public companies with public costs. And especially a company like this, the cost of being public is 7 figures. And they're nearly paying their CEO 7 figures. 2 7 figures is $2 million, and they didn't even do $4 million in trailing 12-month revenue. That's half of all their revenue going into those 2 items, and they don't even have gross profit at all. That's not good, especially for a company that's doing business with H.C. Wainwright to raise money. That is the ultimate, the penultimate sign of desperation based on my history in dealing with shorts, stocks to short. So what else do we have here? Man. So the organic growth, the low R&D, Gavin's compensation, the LD micro. Let's see what else Sam had to say. And again, right? I mean, I'm just here, like, we got into this little debate. We don't want echo chambers, right? I'm very defiant and convicted in my long ideas, and I don't want anybody to challenge me. But at the end of the day, I challenge myself. There's nothing I fear more than being wrong for all of you. Okay? And that's where that discipline, making sure you've got independent industry experts to validate what's going on, that you make sure that the management team has been executing upon what they're doing. If you look at like an electric core, management has been doing for years, literally years, what they said they were going to be doing. They're still not profitable yet, but they've been working towards that profitability for years, hitting expectations year after year after year towards that goal. That's what's important. And they have over $10 million in the bank, and probably need less than 1 or 2 of that for them to get to profitability. No signs of that from LCFY, who has less than $1 million in the bank. I have multiples of that amount of cash in the bank. And I'm not talking about stocks and everything. I'm talking cash sitting in money market accounts, multiples of this. And they burn through it, right? When you look at that cash flow statement, they burn through cash. So that's their track record. That's why you have a chart that looks like this. That until breakout investors came in and started supporting them, the stock was on a complete downward trajectory. And the only times you'd see spikes, right? You see that spike right there? This is a very, and again, I'm not saying who pumped, and it's not breakout investors in my opinion, okay? Gun to my hand, did breakout investors pump this stock? I'm pulling the trigger and saying no. Hopefully I don't put a hole through my hand. I'm confident I won't. They have integrity. But somebody in this situation almost assuredly does not. Because on top of when they signed up with H.C. Wainwright, first thing I said to my wife is, here comes the pump. Because that's what they do. You'll see it time and again. You can check it out almost every week. You could see multiple companies putting out some kind of BS press release, some kind of BS news, or have some pre-market action. Because pre-market's very illiquid. You can move a stock a lot. Somebody moved Electric Corp 18% this morning. I looked at it, contacted the CEO. Nothing was going on wrong. Okay, somebody's playing with the stock. I'm going to buy these shares, dumbass. And let's see if we can play a little chicken here. I know you're trying to scare some shares out of people. Maybe you want to buy some shares and scare some shares out of people. Scare them out of me. I'm going to take your shares, and I'm going to send a message that I'm going to take more of your shares, and you're going to not be able to play this game. Right? On the flip side, there are companies that will pump up their stock there are players, not companies necessarily, players in the marketplace that will pump up a stock in pre-market because the volume is low and very easy to make a stock look like it's moving aggressively. Then it gets on the biggest winners or biggest losers, pre-market list. It gets the attention of traders. And in the case of, a LCFY, for example, here, what I would typically short into is that pre-market pump where we have H.C. Wainwright and an ATM, because it's very clear that H.C. Wainwright is going to use that ATM into that pump. Who does the pump? I don't know. But I'll tell you this. Highly coincidental that H.C. Wainwright ATMs lead to eventual pumps in the share price. By the way, well, then why not buy the stock? Anticipating the pump. Well, the problem is this. If you bought here anticipating a pump and you wait all that time and then you get this pump, you didn't make anything. You waited 6 months just to break even. All right? Companies that need funding go down in price. And so the question is, and you could do it, right? The question though is, at what point can you buy the stock and feel confident that the pump is going to come before the stock drops far enough that the pump doesn't get you your money back? So the best thing to do is to just wait for the pump if and when it comes, and then you short into that, and boom, right? Anybody that shorted into this, and I know plenty of y'all, I'm not going to say who, I heard, took profits on this pump. Okay? And I don't blame you, but this is what companies do to raise money from shareholders. Okay? At shareholders' expense, diluting the shareholders. So that's a problem, in my opinion, as far as that goes. All right, what else did he say? No proof of technological advantages. The proof is on the pudding. Significant pilot tests. Look, okay, so they convinced 2 companies to do business with them. Big deal. Big deal. That's what they're supposed to do. They're supposed to go out and get contracts. That's what an SEO company does. In terms of their technological advantages, we will see. But they haven't done anything yet. In fact, they've not performed against what they said they would in the past, so we should assume that that's going to continue until things change, right? That's what wait time is. We're waiting for them to prove something to us. Getting customers to sign up to a program that we don't know, we don't have access to what happened in the pilot test. Like, go interview these guys and see what they're getting out of this and see how sustainable it is first, right? You can't assess the Cybertruck until people have been driving it for a few years. And even then, with the Cybertruck, you see issues already. But, Consumer Reports, you got to wait a few years until you actually see how does a car respond over time. You guys have given this car no time to see how it actually runs. So far, we haven't seen any signs that it does anything special. Independent validation from any experts, we went through that already. Okay, I'm not going to connect you with my experts. You have to find your own. I protect my experts, and that's what allows me to get the information that they give me. I've got some information on NVIDIA here that I was told by my contact, please do not share this information. I won't. And thank you for that information. I'll use it for my investing purposes. I will use it to help in my thesis that I provide to you, but you're not going to hear about anything that's on this page. because that's what my contact requested. If I violate that, that person will never speak to me again. And now I've lost a very important contact I've spent 30 years building up a network of. Let's see what else we got here. The self-taught guy, we talked about that already. Insufficient R&D spending, we've talked about already. Lacks industry validation as a leader in their space. Two major deals seem to contradict this point. No, it doesn't. I already talked about that. Stuck at revenue, showing no signs of scaling the business. Why are historically low and relatively stable revenues a bad thing? Because a public company is supposed to grow and be profitable. Okay. When you look at an Intermap, yes, I didn't pick Intermap until they got to the point where they had a real deal with real revenue, with real funding. The World Bank approved everything going through. We're already moving towards phase 2. They're already in Indonesia doing work. Okay? That's the difference. The Congo deal was BS and the stock went down because there was no gold mine. We never saw any proof that Congo was real. Indonesian deal, we have proof that it's real, therefore that is gold mine. So the Intermap example is really poor from multiple perspectives, by the way, because LCFY is one of a ton of companies. Here you go. Check it out. Rank in order the companies that do what LCFY does. Be sure to rank LCFY on the list as well. Here you go. Now, again, this is just AI, so, that has limitations. But just as an initial, you got all your links here, so you can go and find back up to what each of these companies do to confirm. But why is LCFY number 9 on this list of many? Simple. Because like my independent expert contacts told me, this is a highly competitive industry. Intermap's industry is not. They are basically writing the specs for some of these deals, including that Malaysian deal coming up. And so it puts them in the catbird seat to win these deals because they have spent all those years where I wasn't telling you to own the stock, getting themselves prepared for this situation where they have a massive database of information that they've been building for years. Over $100 million spent on that database. That's not easy to build. $300,000 of software, LCFY, that's easy to build. I'm not saying that's all they built, but they capitalized, I think, $370,000 this past year. That's it. Low R&D. How many? I've been talking about that for weeks in a row. So I'll delete that. We already talked about that. We talked about that, so that's good. We went through a little bit of the 20F. There's your HC Wainwright. By the way, $100 million. So that's basically an unlimited ATM. That means on an unlimited basis, anytime they feel like they need money, HC Wainwright's going to go out there and sell shares into the public. Spotty record versus execution. LCFY have had a few false starts for reasons that are now understood. Well, that's exactly what happens. When a company doesn't execute, I have my fair share of companies that haven't executed. There's always a reason in hindsight that isn't understood. But until they actually do something, you have to say, look, they haven't succeeded to this point, so we must assume that they're going to continue to not succeed until they show success. Better to show up in the second inning than get rained out. They haven't given up or blown stupid amounts of cash. What are you talking about? They're raising cash every year. Their share count's up over 33% in 2 years. That's massive. Massive. My mentor gets upset if a company dilutes shareholders by more than 3% per year. Never mind 33% in 2 years. Management team being the largest shareholders doesn't mean anything when you have $800,000 of compensation coming your way. Yes, they have an incentive to succeed. I get that. And yes, shareholders being the largest, management being the largest shareholders is a good sign, all things being equal. But that doesn't justify the statement. It's not an argument for spending shareholder money. because some of that shareholder money is going into their pockets. You guys are basically funding their hoop dreams, right? And we're going to see if they can actually make a bucket. So far they have it, okay? I'm not saying that they won't. I'm not God to know. But we don't see anything special. We being the independent experts that I've spoken to about this, and our history with this company has declined and required a stock split. Mark often says he loves companies whose stocks has declined a lot, correct, provided that the company is inflecting, which means the opportunity is cheap, also correct, which means you need to see that inflection point. You need to see the gold mine. It goes back to what you said. You think that these deals with Fathom and Hearst represent gold mine. No, they don't. They represent the potential for gold mine, but the potential for gold mine in this company has been around for years and we haven't seen it yet. Just like in Intermap, we didn't see it until we saw it, right? And then both of our organizations, Breakout Investors, salute to you, and mine said this is the time to get into Intermap. You see what I'm saying? There's a logical way to do this. And if you look, seriously, look at your winning picks and your losing picks. And I'm not talking to you, Breakout. I'm talking to all of you. Look at your losing picks. What's the common thread? A huge percentage of them you will find in hindsight were wait time stocks. Wait time stocks are terrible to be involved in, especially in what, folks? A yellow alert, which we are in with the market above the red line. Okay? I didn't make the rules. I was taught these rules. This is why I make 7 figures a year, is because I follow the rules, is that I try to be very disciplined about having the industry experts, about picking gold mine stocks. Great find is fine too, okay? But not wait time. I try to stay away from wait time stocks unless the price is so cheap you can't resist. But an SEO company's valuation should not be more than 1 times revenue, in my opinion, typically. And this company is double that right now, okay? So you would have to get this stock down 75% before I'd be very interested in it from a fundamental valuation perspective, because I like to have a discount, all right? So that would get us to 2 before I'd be really interested in this stock, which, you know, was back here. It was in the 2s. No surprise. That's fine. 1.5 times revenue. Okay, I'm interested. 1 times revenue. That's fair. 2 times revenue. That's exorbitant, especially for a company that just dilutes shareholders all the time. To this point, that's the one thing they've proven they can do. And yes, a reverse split is typically, you know, I don't worry about reverse splits and splits for the most part because it doesn't change the valuation of the company, especially splits. I don't worry about splits, but reverse splits are often a sign that a company has declined in the past, and of course the future is what matters more, right? But a reverse split is often required to get a company faced up for further dilution, okay? So when I see a reverse split combined with HC Wainwright, combined with an ATM, bing, 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 red lights all over the place, okay? Red flags. Unproven till they're proven. That's all. Yeah, you can defend that, right? I can't tell you that you're wrong about whether or not this is going to be a success. If you feel like Hearst and Fathom are going to provide recurring long-term benefit to make this company grow, I can't say you're wrong. I can't. But you can't say I'm wrong either when I say they haven't proven anything about this, and without anything special, without millions of dollars of investment, which other there are big SEO companies that spend millions or more on R&D annually to be the greatest, best SEO companies possible. Localfy doesn't fit into that categorization. So if they're not special, then their margin shouldn't be special, their place in the industry shouldn't be special, and therefore their ability to create anything special for shareholders should obviously be considered limited, especially when you have the cost of being public and high executive salaries. Okay? By the way, this whole thing, this is my little shot back, the Kendrick Lamar Drake thing, right? But it's hopefully for more importantly for a lot of you, I hope it's educational on how to actually do research on a company. Not saying they haven't done good research. I'm just showing you the holes that I see in this particular research. There's always holes in mine. Everybody has holes, right? If we were 100%, if we closed every single hole in every thesis, then we know we have a winner. We could put 100% of our money into every stock, and you know that I don't do that. I think putting more than 10% of your money in a stock is risky when we can just find 10 stocks that are great to put our money into. So for me, anybody that does that is taking undue risk, or at least starting with a small amount of money. You know, you're just getting started out with $5,000 and you can replenish it quick if you screw up. Cool. But it sets a bad precedent. I certainly wouldn't advise anybody to put more than 10% of their money in any stock, because you never know when you're going to be wrong. And yes, you know that, like, yeah, I would agree that we know that Fathom is confident enough to move forward with them because they're moving forward with them. But you're getting all your information, and correct me if I'm wrong, but the indication I'm getting is that you guys are getting all your information from Gavin or one of his people in his circle. That is a yellow flag in terms of disciplined investing. Investing in a wait time stock is a yellow flag in disciplined investing. Not having industry experts validating what you're doing, like I have with Intermap, hopefully you did as well, is undisciplined to the extent to which my standards have been taught. Okay? It's not for me to judge you. You guys do way better research than 99% of the jokers I see out there. I don't put you in the joker category, otherwise I wouldn't give you guys the respect that I do on a regular basis. But in this case, I see too many yellow flags. And that's all it comes down to, right? And we've publicly gotten into it. Okay, so let's have fun with this so we can use this as an example and see what we learn from the back end. I hope it works for you guys. I'm not short the stock. I hope it works out. I hope it ends up being a phenomenal stock. In fact, I will buy the stock if I see signs of sustainable, recurring growth coming from these relationships. I'll show up in the second inning, and you guys will be able to ha because I'm paying 15 and you guys paid 5, but that's cool because that's how I do things. All right. I was introduced to TSSI at 25 cents and didn't buy until $2. But the thing is that when you lose, most of your wait time stocks will lose. So your money is tied up for a long period of time, and at the end of that long period of time, you have less than what you started with. When you look at AEHR, salute to y'all, by the way, right? Because it was Ashley out of your community that alerted me, hey, this looks like a gold mine situation right here. And I looked at the press release and says, yeah, that's gold mine. Okay? The people that were involved in that stock during wait time got almost no benefit. The stock went down, and at some point was below 1, and we ended up buying at 2. But you have to have the right timing from that perspective. And then what did the stock do? It went to 52 with the surety of gold mine. Right? I made the mistake of buying some of that stock maybe 10 years ago, 8 or 10 years ago, around $4 or $5 a share, which looks brilliant now, right? But it wasn't, because the stock was still in wait time. The company was still in wait time, and that small position that I had went down and wasted time that could have been spent in other positions. I double my money every 2 years. If I spent 2 years in that stock, I missed out on doubling my money. In fact, I lost half instead. That's not how you get rich over time. The large publishing partnership is salvaging after Google's policy change. Construes a positive as a negative here. Yes, they changed their policy. Yeah. You know, this was a great point, right? Because if companies like Hearst can no longer sell their reputation, then that means more business flows back to the SEO companies. I agree. But the amount of this going on in the industry is too small to actually move the needle on the whole industry. But in this case, what I will say is the Hearst agreement is a direct result of that. So it's good that they got that opportunity. Let's see if they do anything special with it. You want to buy in advance on a speculative basis during a wait time? I have no problem with that, or anybody else doing the same. It's just that The research that I've done says that it's too much of a risk to take at this point in time. I'm going to pass on the speculative. I'm going to pass on the wait time, especially in a yellow alert, and wait to see what these guys do because they haven't done anything to this point. LCFY can't provide the same value a large publisher could using its. That's absolutely unquestionable. Otherwise, Hearst wouldn't. Right? Hearst would keep it all for themselves. They had a nice business going. We got a sales people selling folks on this service. We provide the service. We make high margin. Now they're not getting high margin anymore. How much of that margin are they giving up to LCFY, and how much is LCFY giving up as a result? Because if Hearst wants to, right? Hearst wants to keep as much as what they built as possible that Google just screwed up. So maybe they said, all right, guys, we'll give you this percent of our business to fix it. That might not result in strong margins for LCFY, especially since why take a sliver of somebody else's business when you should be able to go out and get your own? You're taking Hearst's business and being like a subcontractor to Hearst, instead of being the prime contractor on your own deals, like it appears to be going on with Fathom. Okay, so shows patterns of pumps. That's 100% correct. I just gave it to you guys. It's my experience. If you want to knock my experience, be my guest. Okay. Nothing but yellow flag. Okay, they don't have nothing but yellow flag, so I'm going to give you that. Mea culpa. You know my shtick on the show. I call people dummies and stuff like that. Didn't call you a dummy, but you know, we have an entertaining show. We don't want to bore people to death, and so we do some stuff like that. But I didn't, you know, I'm not here to say that this is a fraudulent company. I don't think it's fraudulent. I just think that they're exaggerating what they're doing. I don't think they should be a public company. I think the CEO is overpaid, which means that he's taking too much of your money, that he is, the shares that he is diluting on your behalf year after year after year. The impact on his stock is not as much as the positive impact on his wallet. The stock is in wait time. It is absolutely right. He would argue that when the deals were announced. That's incorrect, Sam. Get your discipline correct on this. It's very important. Look, you don't have to learn my process, right? I'm just using my terminology for you, for your edification as a investor who I believe is made great progress and will continue to make great progress. And, you know, I think when you get out of B school, you're going to know more than me about fundamental analysis from a book perspective. Understand? And I don't mean to belittle you in any way. You've got qualities that exceed mine, and I got qualities that exceed yours, but I've got 30 years of experience making some of the same mistakes that I see other people making. And that's where I come out to help. I'm not here trying to hurt, right? I edited Friday's video to take out any potential, view of impropriety there, because I don't want that. I want you guys to succeed. There's nothing better than having strong people in your network. I want to be a strong contributor to yours, and I want you to be a strong contributor to mine. My mentor and I have been partners for years, and we've made each other millions with each other's picks. Whereas if we didn't know each other, we would have never had those picks in the first place and had millions less as a result. Okay? So even though I come across as an a-hole, it's probably because I'm just an a-hole. But no. It really comes from the heart. I really care about everybody. You know, when I come on every week and say I'm mad at the colleges and I'm mad at CNBC because they're ripping you guys off, I mean that. I really believe that Jim Cramer is a ripoff. That's my opinion. Don't sue me, Jim. You can't sue for an opinion. I'm not defamating your character. Although I do have some stories that would and proof of it. So, but I don't come out with those things, because I have respect for that aspect of the situation. And you're not hurting anybody I know directly. But I'm not going to let you go out there with your track record, which is very well known, under 50% hit rate. And you're a much better analyst than that. You were a client of mine, Jim. So why is your track record under 50%? for me to say that, in my opinion, it's because you're doing something uncool, that you're ripping people off some way, my opinion is not an unfounded opinion. And this is where it comes from. People are too opinionated. You know, if your opinion was correct, it would be called a fact. If my opinion was correct, it would be called a fact. Opinions are useless, worthless. My opinions are worthless. That's why I go out and find facts. I find industry experts that can provide me with facts about those industries so we can come as close to fact as possible, because opinions are worthless. I'm sorry to bust the bubble of people who like to go through life saying, well, I think Microsoft's going to go up because of X. And if it does, they pat themselves on the back. That's actually negative reinforcing behavior. Because if you didn't go through the proper process of going through industry experts to vet that hypothesis, all it is a hypothesis. And go look up what a hypothesis is, and you'll see that it doesn't mean anything until it is validated or refuted. Okay? Shoot, we're going to have to get going because I've got a thing going on today. We got LD Micro, we got guests coming through today. Industry experts, Wall Street professionals, things of that nature. We're going to gather together, grab a lot of great information, and come share that with you every Friday at 2, as I do for y'all right here on Stock Talk Live. Sam, I'll await your rebuttal to my rebuttal if you so choose to continue this debate. If you want to do it one-on-one, we can go live. I did that with the Movie Pass. I've got an undefeated record going head-to-head against people on the internet. We can do that. Or we can just let Sleeping Dog fly, and that'll be the end of it. No problem. But again, apologies for making it seem like your reputation is in question. It is not. I love those guys at Breakout Investors, so shout out to them, the research they do. Mea culpa for that, and namaste. Catch you guys Friday. Take care.